being streamed onto YouTube, and you can watch this later at our YouTube channel, BNE IntelliNews YouTube. And at the same time, hello to everyone who's listening to us on Spaces. We are recording this on Spaces, and hopefully we haven't got any feedback problems, but if we do, please let us know. So Max, welcome. Very good to see you.
Sure, good to see you, and certainly an exciting time to be talking about my favorite subject.
Yeah, the timing is perfect, isn't it? Last night, or rather this morning, the deadline expired on the OFAC, the special license number 9A, that allows Russia and Russians to pay their debt obligations in dollars. So in theory, Russia and the state and the companies can no longer make payments on their bonds. So we're headed towards default. I think when we drill into it, it's a little bit more complicated than that. So everybody, I don't know, there's a certain amount of debt out there, and the Russian state has been paying and showed itself able and willing to pay. But to dive in at the main question, I mean, how serious a change is this? How big a thing is it? Nuclear option that's been talked about by banning Russians from being able to pay with dollars?
So, I think the biggest and most impactful sanctions move that we've seen was already the sort of main initial one we saw after Russia's February 24th invasion, which was the banning of the Russian central bank and its addition to the SDN, specifically designated nationals list, on the 28th of February. All these moves sort of really follow on from that. General License 9A, the one that you were just discussing, expired today, and that had allowed the processing of these transactions. But we'd already seen a number of changes from that. And essentially, the noose has been ever tightened around Russian debt, to the point now where it is certain that they will default, or effectively certain, barring some major geopolitical change, Russian withdrawal from Ukraine, something I think we don't expect, certainly not in that time period, on those next bond payments that are coupon payments due on the 23rd of June. They'll then have a 30-day grace period to make them. But so that's when it will formally happen. But technically, one should understand Russia effectively as having already been in default for quite some time now, even if none of these technical triggers were met because of some of their fudges with payments around the OFZs, their selective repayment of domestic bondholders in rubles. So, this is really sort of the last step, but the Russians will have already made clear their argument will be this shouldn't be considered a default because they were willing to pay and they were forced to pay. And that has very significant implications for how this will play out in the legal system over the long term. Okay.
So you've basically covered everything. Let's backtrack a little bit and a couple of specifics, so I be clear. The license allowed specifically, and it just affects US citizens, that they are no longer allowed to accept dollars from Russia. That's the actual technical rule here, isn't it? So go on.
U.S. persons, which is a much, much, much broader definition than U.S. citizens, because it effectively means anybody with any connection to the dollar, which in the modern financial system is anybody serious.
Yeah. And does it apply to, because I mean, several of the bonds, the next one that's coming up on Friday, 27th, is in just 2 days, 235 million coupon payment, isn't it? Or no? That's one in July.
There's one in June. There was one that was due to today. Coupon payments.
But they paid it. They paid it early.
They prepaid it early, yes. So that this goes into that argument, so they can say we didn't actually default. We were, effectively the victims of hostile state action that prevented us from when we were willing to default. I would say the Russians are being a bit cheeky with that, and I don't think the courts in the very long term are going to be sympathetic to that argument. But of course, if you're Russia, you're hoping that all this eventually gets litigated many, many years from now, which lack of a sovereign bankruptcy mechanism means that's the case.
No, let's come to the legal stuff in a bit. I'm looking at the schedule, so there's like half a dozen bonds between now and June 24th. All of them, except the last one, the one we just mentioned, they also provide for payments in euros, in sterling, and in Swiss francs. Do I understand this right, that Russia has the option then of paying for, the other three, the one's already been paid, the other 3 bonds coming up before the last one in June? They have the option of settling those in euros or sterling or Swiss francs, and that's not sanctioned. They can go ahead and make those payments.
Well, that's a very complicated question. Because the banks involved in processing those payments are U.S. persons. I am not a lawyer, but my inclination would be to say that, especially given the most recent Treasury language in the most recent statement announcing this move, that the license wouldn't be renewed. I do not think they're likely to be willing to do so unless they get very explicit guidance. Now, these are a particularly interesting mechanism because that language was introduced after the annexation of Crimea, when Russia returned to capital markets for its sovereign in 2016 and 2017. And initially it was just Swiss francs, pounds, or euros. And then after that first issuance, which I think is one that has a coupon payment due in September and March, so not one of the ones coming up now, they also included rubles in them as well. And I made a big stink about this at the time, saying that these bonds effectively had gigantic haircuts priced into them, and the market didn't treat them that way, and that anybody holding these bonds was in a much worse position. Now, ultimately, the way it's played out is that everybody holding Russian bonds has been a very bad position, except for maybe one or two people who traded very quickly and declines. But those will be an issue that I think gets dealt with in the restructuring over the long term, not one that gets dealt with now in the next few weeks.
But it remains, in theory, possible to be able to pay, the upcoming bonds, especially the ones, well, the one that was paid off was denominated in euros. The ones that are due after that, between now and the end of June, are all denominated in dollars. But in theory, the Russians will argue that, look, you can pay in euros, and that's not sanctioned, so we can do that. But then, as you say, there's the willingness to do this, which plays into this. Because the bonds that have been paid so far, the Russians were willing, but the paying banks, or the counterparty banks, they actually didn't want to touch it with a barge pole. And there was this whole process of getting OFAC, the US State Treasury Department, to sign off individually, explicitly on each individual payment. You will not be sanctioned if you handle this money. And then it went through, which caused all sorts of delays, but they all went through, no?
Well, so we saw sort of two changes in that process. Initially, right after the central bank sanctions were announced, this license enabled payments to go through, and the Russians used some of their frozen money that had been frozen under the sanctions. Treasury then said that that wasn't allowed, and they could only use new funds that had come in essentially to Russia since the war, effectively taking some of the surplus oil and gas money earned from the record high hydrocarbon prices we've seen over the last 3 months. Interestingly, Russia paid it through a state mortgage bank, Dom.rf, which isn't sanctioned, to process it. I don't think it was actually their money, but there's a little bit of uncertainty there. But on the point then about the banks processing these, one of the other changes that we saw with that renewed issuance after Crimea was a move to have the underwriting banks be Russian banks and the book builders as well, but the correspondent banks who handle the payments out into the U.S. system, those are the ones who really matter. And those are the ones who I think will not be willing to process these kind of transactions, even if they're in euros, Swiss francs, or pounds. And the Europeans may very well take their sanctions.
Couldn't the mechanism that's been used until now, whereby when someone like Severstar were trying to transfer their money, and then they went to Citibank, I think it was, and then Citi rang the state Treasury Department, said, like, is this okay? I mean, we want explicit use to put on a piece of paper, say this is okay. And couldn't that same mechanism function going forward, in so much as whoever, Russian Railways, wants to make a euro payment on to settle a dollar bond because it says in the covenant it's allowed to, and if they ring the state Treasury Department again and say, like, do you sign off on this? Because technically it seems to me it is possible, because euros are not sanctioned.
Yes, they could receive that approval, but there's two matters to consider here, right? From the U.S. both are essentially from a U.S. policy perspective, but one is you don't want to support the development of these kind of clauses in other countries' bonds in case it weakens the dollar's role, and then secondly, making this stuff really complicated and essentially dragging it all through the weeds and making it an unpleasant experience is part of, at least in my view, the US's strategy. They don't want it to be easy to deal with, get money out of, make money with, have the Russians be able to have access to capital in the long term. So if you're a market participant and you look at it from a business investor point of view, say, oh well, the Russians are still willing to pay despite this. Why shouldn't this be allowed? These other contracts were agreed before. You have to remember that the policy decisions driving these are not about even Western. They don't even really take Western investors considerations into heart, but is really about U.S. foreign policy and how do we essentially weaken and make things more difficult from Russia, and that will motivate over any other interest. Even if the bond stock was larger and Westerners or Americans held more of it, I still think that would be the case, because even if you take all the Russian corporate debt together, it's not a systemic risk for the U.S.
Before we go further into the weeds, a couple of other basic questions. Exactly how much does Russia have outstanding? Because I keep saying there's $40 billion, but we have to differentiate, don't we, between the international Eurobond and the foreign-held domestic ruble debt, the OFZs.
Sure.
And I think those are two different numbers. 40 billion, that relates to the Eurobonds, does it not?
Yeah, that relates to the Eurobonds. The Russian central bank has stopped publishing good data on foreign OFZ holdings since sanctions began. I assume, based on some of the market turbulence that we saw at the end of February, that it essentially crashed overnight, and then a lot of that got dumped, prompting some of the Russian central bank interventions into that market.
Because there was about 20% held by foreigners.
Foreigners before. Yeah,
the peak was 34, but
the debt stock that really matters here in the very long term is that 40 billion foreign debt that you were speaking of, denominated mostly under Eurobonds, under British, not American law, actually, which is another fascinating aspect of this. It's America that's determining everything, but these bonds are actually written under British law, and the British government has sort of deferred essentially to the U.S. for its leadership on this. I would like to see some more policy action from Britain, but that's a point perhaps for later. But on those OFZs, the Russian capital controls have effectively stopped those from being attractive in any way, or people who held them from being able to repatriate their cash after, unless they get explicit permission from the Kremlin, which I haven't seen anybody getting, but it may just be that nobody notable has tried. I'm sure some people have, actually, to be fair, especially Russian government connected entities. But essentially, that's the difference between investing in euro bonds and international debt and investing in domestic debt. When you invest in euro bonds, you invest not only in a hard currency, but essentially with the full backing of the British legal system, and you think that gives you a comfort. That's is also a reason for why some of these companies, not just the sovereign, will ultimately borrow on international capital markets, but when you borrow domestically in Russia, whether it be in corporate or sovereign debt, you essentially agree there to have Russian law be the only one that applies. Russia would like its laws to apply more to the British debt as well, but that revolves around some of the changes in the legal language.
So, and again, a basic question. I understand that of the 40 billion international debt, that only about another $1 billion is due for repayment. I mean, there's 160 million due at the end of June, but then after that, there's another $1 billion to be paid this year. Is that right?
Yeah, so if I remember correctly, Russia doesn't have any other euro bonds that mature this year. The last one that matured was that big one at the beginning of February. But what they did was they gave rubles to domestic holders. They said, you have a choice, please, come bring these and we'll repay you a week early in rubles. But it was quite clear that any domestic holders didn't have them. So they lowered their foreign currency liability there quite a bit. Now, Russia does have, a lot of bond maturities coming up. And I think, that's in terms of beginning to think about the long-term impacts of the economy, right? It's impossible for Russia to get any new debt on Western, at least, capital markets anytime soon. And China doesn't seem to be willing. And the analogy that I like to draw there, right, is what makes debt so powerful is the ability to move money over time. You can get a mortgage on a house that you can't afford that year with your predicted earnings from future years. For sovereigns, this is really important for their domestic investment. But the other thing that's really good about it in sovereigns is it essentially increases the hard money supply, because normally sovereigns don't ever just allow their bonds to mature and not issue new debts. But normally, if you have $1 billion in debt maturing, you'll then borrow a new $1 billion, hopefully at a lower interest rate, at least relative to your credit rating. And that is now impossible for Russia. So that's where we start to talk about these, really long-term economic impacts.
So on that point, I mean, with only $1 billion or so, due this year, and given that in just April, Russia earned whatever it was, $28 billion from gas exports. So money is not really the issue here. And as far as the budget is concerned, that Russia has never issued Eurobonds, or at least in the last decade or so. It's never issued Eurobonds to actually finance the budget. It doesn't need to. It's got plenty of money at home, and the growth of the OFZ market is the source of whatever capital it wants to raise, that Minfin wants to raise to fund the budget. So in that sense, this whole thing is a storm in a teacup because it's fairly irrelevant. The only reason why Russia was issuing Eurobonds in the first place was to give a pricing point, a benchmark, so that corporates who are going to London could have something to price themselves against. This is sovereign plus whatever. So in that sense, this doesn't make any difference. But you were talking about, Russia going to places like China and to raise money. And if these sanctions continue, if we have the huge economic contraction we're expecting, if Russia loses, a big chunk of its oil revenue, then actually all of this might start to make a difference, that Russia will become a normal country that doesn't have that subsidy from hydrocarbons and will need to raise money abroad. But surely all of that's like way in the future, a couple of years down the road. I mean, it's going to take that long to unwind the oil and gas revenue thing. Huh?
No, a lot of this really is looking at the very long term. And as we were saying earlier, that's part of the, at least my view of the US intent to make this also difficult, is that it's not the kind of thing that's just going to get picked up and put back together. You're right. Russia hasn't needed to borrow on international capital markets for funding purposes. As I said, the difference between, just oil revenues and the like is the more borrowing you can do effectively expands your money supply of hard currency, which is important for currencies over the long term and for economic investment, separately from just any surplus budget revenues from oil, which aren't renewable in the same way, or at least unless oil prices go back up. And I think, that's something that we're really looking at for the long term, is the US knows that in the current environment, Russia has enough dollars and hard currency, and the point of this isn't to quote unquote bankrupt Russia, but to make things really difficult to invest, sustain, and loan in the long term. And for example, this is a tiny bit tangential, but I think is newsworthy enough that it's important to discuss quickly, is we see that with the rubles for gas demand, right? One of the other impacts of these central bank sanctions and the like has been to really cut off ruble convertibility, and the amount of rubles traded for dollars is down 90% or 80% since the war began. Russian imports are cratering. Again, while they have these dollars coming in, that's okay, and they can feed the dollars back into the people and system. As you will know, however, demand for dollars in Russia typically from importers and the like is highly cyclical. There are periods where demand really picks up. And essentially what the West is doing now is not preparing for 1 month, 2 months from now, but preparing for the really long term. And if sanctions continue to be imposed on Russian oil and gas, eventually those surpluses will go away. Eventually Russia will then have a dearth of foreign currency.
But that's several years away. Before we go on, I just want to say to everyone who's listening and watching us on Zoom that if you want to ask questions, you can use the chat function in the bar at the bottom, and we will see your questions and address them, relevant ones, as they come up. Another specific point in the lead up to the events yesterday, people have been saying that there was a debate in Treasury that one of the ideas was to allow Russia to continue to meet and service its debt, as that would be a way of bleeding away hard currency that Russia could then use for the war machine. Yeah. However, Yellen, I think, made it quite clear, and I think she said explicitly that it's not necessary, in so much as the amount of money that's involved is so small that it's going to make no difference to the Kremlin's ability to fund the war. But that's the case, isn't it? When we're talking about a small amount of money, in effect, compared to whatever it is, $300 million a day Russia's spending. I mean, in 3 days.
That's exactly right. I don't think I think that's why that decision was, not gone with it. In some ways, if Russia had a larger debt stock or the like, maybe it would still be willing to pay it. or maybe the U.S. would still be willing to let them pay. I think a whole bunch of strategic decisions would have been made differently in both Russia and the West. So I don't want to say that that's a definite counterfactual. But yeah, the amount of Russian payments that get on this are not going to affect Russia's ability to wage war. But over the very long term, Russia's cut off from Western capital markets does leave it in a position where, one, it has to eventually settle all of these claims before it goes back, and that requires some kind of at least quasi-diplomatic resolution, or almost certainly officially diplomatic now, given the Treasury regulations and State Department actions involved. And is really, forward-looking and saying, we have to make clear that doing, I think it's part of it is a realization that in 2014, the sectoral sanctions, they did disincentivize loan-ins and credits to Russian businesses. Rosneft and Gazprom went from being such large borrowers from European banks to being relatively small, at least compared to their size. Rosneft in particular, given its applicability from the sectoral sanctions, but they were viewed as things to sort of work around for how to have a working relationship with Russia. This now is basically saying you can't find workarounds. We are, until there is a new kind of Russia to have a relationship with, this isn't going to go. And that's something I think people have to really consider. Sudan, which is the most recent one to sort of cure its sanctions result, and also had a very relatively small international debt stock when it got into a whole bunch of issues in the early 1980s. That was 40 years for it to be restored. Obviously, Cuba, Venezuela, Iran, there's various lawsuits going on around all those for anywhere between 5 years to 5 decades. So when sanctions get involved in this stuff, unless a country really outright loses a war, like we saw with maybe Japan or Germany after World War II, these issues last for years and potentially decades.
Decades, yes. And specifically, again, to clear up another point, the license, the general license 9A, it won't affect the OFZ business. I mean, that's more a function of the SWIFT sanctions that it's very difficult to move money backwards and forwards. But in theory, again, a foreign investor could buy an OFZ if he wanted to and not be subject to sanctions.
I would have to double check the wording around new issuance of Russian debt. It may be the old ones, I think, yes. New ones, I'm not sure.
There's a ban on primary, but that's specifically for Eurobonds, is it not?
Again, I just have to double check the language. But old ones, yes, it's possible. But again, it also Russia's own capital controls make it a real issue.
Yeah. So look, one of the core issues here, I mean, we're talking about potential default, but as we've discussed, actually Russia's got plenty of money and the amount it needs to repay is really quite small. And the Kremlin, and even more so the companies, have made it perfectly clear that they have the money and they're actually very keen to pay this debt. And what's going on here, we have a weird default whereby you've got the bond issuer who has the money, is willing to repay, but because the US has blocked that ability to pay, it's going to default through no fault of its own. So is that a default?
Well, no fault of its own is a very cheeky way to put it. I'll put it that way. I would say, again, I'm not a lawyer, so I'm not arguing legal advice. I do think it's important to highlight that this will be adjudicated by British courts, not American courts. I don't think British courts are any more likely to be to consider Russia credulous, let's say. I certainly believe in legal realism, and that the reality of political events affects how courts look at things, even if in an ideal world maybe it shouldn't. So I do think we'll get those. That is certainly the argument Russia will make.
Because Russia will come with force majeure. I mean,
exactly.
We have the money.
But the sanctions on Russia are so strident in other matters and accepting direct state payments. Britain has its own sanctions now on providing professional services to Russia. And of course, even in London, where there a large number of law firms have been involved in what are known as slaps and have long had a big business working with the Russian sovereign. There's been pretty clear that the UK government doesn't take a positive view of that. Some services have directly been banned, and so for Russia to get the best representation in those arguments is already going to be difficult, and then even having them considered credible is going to be difficult. And on your point, one last thing, about weird defaults, to adapt from the famous quote, every sovereign default is weird and unhappy in its own way. No two are quite alike. Yeah. And so, yes, it is weird, but there is plenty of history of political decisions causing defaults. The most recent one, although they'd already begun to default on some stuff, is Venezuela, and perhaps the best known. And the Russians, ironically, did some financing for the Venezuelans after that proved how difficult it is to get around some of these sanctions because they ran into their own issues. But then the best example that I can think of, and that I keep harking back to, even though it was in a different capital markets world, is 1941 with the invocation of the Trading with the Enemy Act on Japan that froze all Japanese business, trade, and debt payments, and caused huge disruption to Japanese imports. It's a topic for someone else, how large a role that played in Tokyo's ultimate decision to invade. But there was no sort of legal repercussions, legal standard in the US for acting hostily there. We may actually get some interesting legal precedent at some point from another Russia-involved case, because it's here in the UK, which is Russia and Ukraine's own Eurobond dispute about a bond. We're still waiting for a judgment there. $3 billion plus a lot more in interest that the Russians demand now, given that the bond's been in default for 7 years.
But isn't this where this is all heading? I mean, the Yanukovych bond, $3 billion from whenever it was, 2014, or even 2013.
December 2013, December 2013. Yeah. They were supposed to issue more the day that Yanukovych was ousted. They were ultimately supposed to issue $15 billion.
That's right.
$3 billion got done.
But that's been in the court forever. I mean, isn't this argument, over this, isn't this where that's headed? It's going to go to the courts, and it's going to sit there forever.
Forever. And the sort of the argument that we've had from the Supreme Court, or that we had in front of the Supreme Court here, was essentially Ukraine arguing that it was forced into this debt at gunpoint, and that Russia included a bunch of terms in it that were very clearly aimed to push it into default. The Russian argument, to just at least get to say what they will argue, even if, again, I don't consider it credible, is the Russians were very, very smart in what they were doing and had very good legal advice, and they structured it as something that was both a private market debt and what's known as an official debt, an intergovernmental debt. And Russia's formerly a member of the Paris Club, the body where countries go to organize their debts from state to state. And they tried to argue it was both. A lot of US Treasury pressure got the capital markets to treat it as if it wasn't, so it didn't get involved in the private debt restructuring that we know all about from Ukraine in 2015, 2016. But also with the point that the Russians really harked about, and that I thought was political, and I thought it was facetious and silly of the IMF to very strongly deny it, although I understand why they do, but was that the IMF changed its rules, and for its own support for Ukraine after the Russian invasion in 2014, allowed countries to borrow that were in arrears to another official creditor for the first time, essentially negating that peg of Russia's strategy. And at the time, Dmitry Medvedev, the then prime minister, Russia's former president placeholder for Putin, he described this as opening the Pandora's box of international finance. Now, my view is that international finance has been subject to political whimmery since it first existed in ancient Mesopotamia. But that is the Russian point of view, and I think that led them to have a more hostile relationship with it, and to do some of the, again, things I would describe as cheeky, like those alternative currency payment event clauses in the more recent bonds.
So look, up until now, we've been talking about pain inflicted on Russia, but we should point out that we're talking a total of $40 billion external debt. That's held by Western investors. Those Western investors are going to lose $40 billion. $40 billion was the same amount that when the GKO market blew up in the last famous default in 98, the GKO markets were $40 billion. Of course, $40 billion today is less than it was then. But those people are going to lose their money completely, aren't they?
The whole market structure is quite a bit different. I mean, the simplest answer is yes. Those bonds, they already now trade at pennies on the dollar, or a few, dozen cents. And so, yes, they will not be getting their payments back. A lot of them are held by index funds and the like, and there will be issues with, the Russian expulsion from the indexes and how those are drawn down. But, yes, that money will be lost until it is eventually then, exists as sort of paper out there that obscure people who, some connected to vulture funds and the like. Some, there's still people out there who collect Russian debt from the pre-Tsarist era in France for the hopes that they can.
Yeah, the French debt. That came up under Chernomyrdin. I mean, Chernomyrdin suggested he might pay that French debt.
They did actually pay some of the French debt. I mean, literally, it's something like 0.1% of the entire thing, but it is part of Russia's international assistance after the '98 default. That technically did get put back together. Yes. But now in the sort of market that we exist in these Eurobond papers, at some point there will be value for vulture funds or the like to try to find there whenever 10, 20, 30, 40, Soviet case 80 years from now. There is a Western alliance. So that money isn't gone and dead for forever, but effectively, for the people who hold it now, it is 90%.
If we draw a parallel with the '98 default crisis, and the GKOs got restructured, and they didn't actually default on them; they just restructured.
Well, and so the default is a restructuring. When we talk, restructuring is a default, but when we talk about defaults today, it's the standardization of cross-default clauses that really matters. So when one thing is due and you don't pay it, everything is due. That wasn't the case in the '90s.
No, but that got paid back in the end. And given that we know that the Kremlin is very keen to maintain its credit history, and the corporates even more so, that there is a scenario where this debt just sits there in limbo. But then when finally the peace returns and Putin dies and we have a new regime, then all the talks will open and that debt will become again, no?
I would push back a little bit on how much the Kremlin actually cares about keeping strong relations with Western capital markets. I don't think Putin is gaming out how he could borrow from capital markets in 5.
No, but not Western. But surely the default. I mean, the problem for Russia here is that they're not going to borrow in New York and London anymore, but they will go to Hong Kong, Shanghai, Singapore, and to have a D stamped on your passport is going to cause you costs there, and that's one of the reasons why they want to maintain.
Yes, but I do think that decision ultimately for Chinese lending, simply given the structure of the Chinese market and how it's all originated through state entities, that is not a decision that will be made by bankers in Hong Kong or Shanghai. That is a decision that will be made by if they're willing to do it, by the Central Committee of the Communist Party of China, and so there it matters a little less. I do think it matters to Putin to be able to challenge the dollar system and criticize it. And so, a lot of this language and willingness to pay, again, the amounts of money that they've paid so far are fairly small, as we were discussing. So the Kremlin, which we've already seen, is willing to burn $3 billion in Ukraine, 9 years ago to mess with the global Western capital markets, is willing to do, the same happily in its own market. So I don't think the Kremlin's motivations in paying the debt all come from a place of saying we want, capital markets to consider us a non-defaulter.
Yeah, I guess it's a question of legitimacy, which is important to Putin. You mentioned cross-default. That's another thing that's come up. The possibility of, if they default on the 24th June bond, then that triggers defaults across the board in lots of bonds, which have language built into them. But if there is a default in the market, everyone has the right to reclaim repayment.
I think every Russian Eurobond now, I'm 99% sure, has that cross-default language in it.
Right. But doesn't that mean there's going to be a cascade? I mean, small amount, one bond goes belly up, $1 billion due this year, 40 billion outstanding. Suddenly, all 40 billion come due on the same day, on the 25th of June. Is that possible? Is that how it works?
That is, 1 month after, but essentially the formal process is 1 month after someone will go, they'll put a claim here at the British court. They'll seek to advance acceleration. They could have a bondholder vote. It's one of the ways to do it, to recognize that this has happened. But nobody will actually get paid any of that principal. What it will enable then is the starting of lawsuits going after Russian sovereign assets. Now, there's some precedent there, which is There have been a whole bunch of lawsuits going on for almost 20 years now, as I'm sure you're very familiar with, the nationalization of Yukos and its effective handover of assets to Rosneft. In 2014, there was a famous judgment from a Dutch court ordering $50 billion, so even more than the stock we're talking about now, to be repaid to all those investors. But not a single cent has actually been seized from the Russian Federation since. But in the 90s with the default, you had a few, random little incidents where, Russian planes got detained in France because some creditor made a claim. And that was briefly a political spat there. And you will see people trying new and novel ways, because I'll avoid the technicalities, but there's something, there's a corporate veil between Rosneft as a company and the sovereign itself. But you'd think Rosneft as an international oil company would be the easiest one, or one of the easier ones to go after, because it's shipping oil around the world, so it has valuable things that you can go and try to attach. But as we've seen in almost 20 years, that has not happened.
Tell me though, the Crossdefault, isn't it up to the individual bondholders to decide whether to trigger that clause, whether to demand immediate payment or not?
There are collective action clauses in the bonds that
but it's a case-by-case basis. The bondholders have to have a meeting and decide what they want to do.
The bondholders have to have a meeting. Again, I'm not a lawyer. My reading of the Russian CACs, as they're known, is that it would trigger, those cost acceleration clauses would trigger it across the whole class of Russian bonds. It may be that they've changed some of the language in the 2016 ones. And the thing about Eurobond language is it usually doesn't change at all, and it's one or two sentences that are adapted across the whole market when they do. But the Russians have started bringing in a lot more changes into their own after 2016 and 2017, and sometimes it's just a comma in a different place, or a paragraph that's normally two being one, that all the legal experts are picking up now.
It's possible then at the end of July, there'll be a demand for all $40 billion to be paid off, but it's unlikely to happen because, as you say, no one's going to get paid.
You just broke up for the last seconds there. Yes, it's possible there'll be unlikely at the end of July, but you follow up?
Yeah, no, I just said it's unlikely to happen though. Just because no one's that money will not change hands. Paper underlying the contract so that people can make claims in the future may change hands, but the money won't. And what about the credit default swaps? If all these suddenly default, in theory, anybody who bought CDS, they get paid out, don't they?
Yeah, so the International Swaps and Derivatives Association is the one who makes that determination. They have said already that for the bonds with the alternative currency payment triggers, if they're going to give you rubles, that's in the bond contract language. Sorry, CDS doesn't cover you, which I actually think is the right thing to do. Although most people who deal with CDS have issues with ISDA and don't always like its decisions. But yes, I fully expect that ISDA will rule it in default, and that those CDS will pay out, at least on bonds bought that aren't the post-2017 issuance.
So these are still large amounts of money, and $40 billion, but that's nowhere near enough to destabilize the financial system. Everybody's going to be able to absorb.
No, yeah, those. Of course, I would be foolish to say that I think banks have written their. I don't want to be so presumptuous as to say banks have had great risk management policies with writing their CDS on this stuff, because of course, a lot of the world over the last 15 years has been shaped by banks not having great risk management policies with writing CDS. But the CDS market for U.S. mortgages versus the CDS market for Russian bonds is not comparable. The CDS market for Rhode Island is probably larger than the CDS market for Russian bonds, Rhode Island real estate.
Another way they could get compensated, you mentioned that default that formally allows them to bring actions through the courts in order to seize Russian assets. And of course, the big honeypot out there is $300 billion of central bank reserves, which has only been frozen, as far as I understand, which means it still belongs to the Russians. They just can't use it. But this would clear the way for cases to be brought by bond holders to seize those funds, that $300 billion that's being held in Europe.
Yeah.
Isn't that what everyone's going to do? Isn't that what everyone's going to go after?
Yes. Short answer, yes. Long answer is very complicated. A lot of people have been trying to do that with, it's not all reserves, but the most comparable example is in Venezuela, where the Venezuelan state oil company, PDVSA, owns Citgo, a very large U.S. pipeline network and petrol gasoline seller. It has two boards now because, of course, the Guaido government has put in its own, but a lot of claimants have been suing and trying to be made whole on the money that they're owed by Venezuela by going after Citgo and trying to get a piece of that pie without success. Those determinations ultimately really get made at a White House level because it's the executive orders underpinning those freezing of assets that judge it. So I expect we'll have some kind of new executive orders, or at least amendments to the existing ones around Russian frozen bonds coming up in the future. But there's a whole bunch of other claimants too, from those Yukos investors that we spoke about to primarily the one that I think will really matter here is, of course, Ukraine, and some of the language that has come out saying, Russia should be responsible for helping to rebuild and repay Ukraine when this is all over. So, I don't think it'll be that at the end of this summer, let alone in June, that the U.S. Treasury says, please bondholders go and have 10% of this frozen pile of Russian assets. There's a whole other legal framework about actually taking those away from Russia rather than freezing them that needs to be done. So, I hate to always say it's a long process, and I don't have the answer for you today, but it's going to be the Venezuela one has been going on for 5 years now, right? Before anybody's gotten paid.
So this
maybe
is
that long in Russia.
This is everyone is acknowledging that getting hold of that 300 billion, although physically it's there in Europe under the European control. Von Leyen was on Davos yesterday, and she mentioned this and reparations, and that Russia will have to pay for reconstruction, and she specifically referred to the frozen CBR assets, but phrased it if possible. And everyone who's talked about this is not taking it as a given. You kind of think that, this money is ours. We just make a law saying like reparations and we can use it for Ukraine. But is it just a question of law then, the legal cases? I mean,
it's certainly a big legal question, but there's also a big political question, right? Both for the U.S. and for Europe. Of course, a lot of these assets are in Europe, but we're talking about real big picture questions about euro versus dollar, about what it means to be a sovereign and have your assets somewhere. The one example I'll frame it with, I'm not saying this is the main issue, but it may be the easiest one for the broadest number of people to understand, is that, let's say you're a United Arab Emirates, right, with a gigantic sovereign wealth fund that broadly is an ally of the West, but occasionally has pretty significant disagreements. You're going to be looking very, very closely at what's happening to another sovereign's assets and investments and how those are being handled. And, there's the potential for real ramifications there that it either, I don't think it'll be a U.S. versus Europe competition thing, but certainly it could see very large amounts of money from other less democratic countries and their level of attractiveness of investing in Europe or holding their money there go down.
China, of course. I mean, it's got $3 trillion invested in the U.S. T-bill market, and clearly China and the US are on collision course, and so China must be absolutely.
In terms of the bond market stuff, China, because China has a closed capital market, I think this is a discussion for another time, so I won't go too far down it. And I'm not a China expert, but there's a codependency there in terms, as we were saying, Russia earlier doesn't actually need to borrow a hard currency in the West. For reasons I won't go into now, China essentially needs to have a large amount of U.S. Treasury holdings to have its economy function the way it does now. And in some ways, it reminds me much more of a mutually assured destruction situation with the economic interdependency, at least on a credit level, not on a trade level, or at least is different on the trade level. Whereas in Russia, it's very clearly a effective nuclear power in the U.S. and the West with the dominance of the dollar system versus a country that does not have geoeconomic weapons of anywhere near the same size. They do have oil, fertilizer, commodities trade, but because they don't dominate those markets in the same way, while they can cause a lot of pain and disruption, it's not an equal set of weapons.
I'm just looking at the questions. We've got one from YouTube. It says Russian CDS prices have risen sharply over the past 2 weeks for obvious reasons, but the yields on the 2, 5, and 10-year bonds have remained flat at around 10%. Is this a result of Western holders trying to get out of the market?
I'm not sure about the last phrasing of that question. I would say the bonds have really, remained flat because there's just not a lot of trading in them, right? People aren't going to go trade into them, even if it's just for reputational risk. There's like maybe one or two guys in Russia who are trying to do it, but it's really a complete collapse in the amount of trading of these instruments that I think is causing that. And it's the
to what extent
we should really look for.
The domestic investors, they've been buying these things too. I mean, obviously in the OFZ market, it's 80% Russian, but to what extent are the Russians themselves invested into the Eurobond?
It had really depended on the class of Euro bonds. I mean, for example, the sort of best known ones is Открытие, Russian bank, got in a bunch of trouble for essentially cornering the market in the 2030 Euro bonds. The Russians paid those out early with part of its bank cleanup a few years ago, and that had caused some real price issues there. The most recent one, paid in April. It was something like 80% held by domestic institutions. My rough finger in the air estimate, looking at the various classes and stuff, is that it's gone from 2014, when I think it was only 25% held by domestics, to probably closer to 60-70% pre-invasion across all classes.
Another question for Ahmed Buria. The general license 9A or C, it's got updated, has expired, but there's more exemptions. There's GL13, which is to do with administrative payments, and GL8B, which is to do with energy payments. And those licenses are still in effect, particularly with the energy payment one. So that $28 billion that Russia made in April, it's probably going to make it again in May, because that exemption is still in place. Are these things going to be rolled back as well? I mean, they endanger.
So my expectation is that GL13, the administrative payments, will be tightened, but extended in some way. But GL8B, I think, is almost certain to be extended, because the U.S. won't want to preempt European action there. I mean, there's very strong opinions about whether Europe can even afford to fully cut off Russian gas in the next year or two. Of course, Europe itself is discussing the phasing out of these of its own oil purchases, but I think that will essentially be extended in its current form, just because the U.S. won't want to preempt Europe. But if you listen to Mark Rutte the other day, the Dutch Prime Minister, there may be some action on at least oil payments before then that could then also be reflected in that license.
Yeah, and there's one here from Alexander Ostrak. He's asking, does the expiration of the GL9C, does that affect non-US holders of these bonds? Doesn't that basically
I mean, that goes back to the point that we were discussing earlier. It does, because of U.S. processors, it can. Now, Russian bonds also include words for payment through the National Settlement Depository domestically within Russia. So if you're a Russian holder of Russian Euro bonds, you could probably, technically, legally still, or at least under U.S. law, and in terms of compliance with it, I think you would still be able to get payment there on the National Settlement Depository. But of course, as we saw with the big bond payment due in April, they effectively told people to accept rubles and we'll pay you back now rather than a week, and that's what happened. And I don't think the Kremlin is, at least on the principle of it, going to on the principal repayments, not the moral principle, going to be giving billions of rubles over to Russian people who invest in these, unless there's some strategic / corrupt dealings. But there is a possibility. It's possible.
OFAC, I mean, it can actually, on a case-by-case basis, issue individual licenses for any payment that they want to, can't it? So, I mean, there could be...
It can. I don't think we would see that in this situation, because it would complicate things in a way that isn't good for the U.S. position of desiring to complicate things, because it would essentially, allow people... It would feed that argument that this is, selective and politicized. And while I do think it's all politicized, and the international debt should always be thought of in a political manner, that's sort of, the whole spiel that I've based my career on for a number of years. So I'm very dedicated to that point. That would not be something I would expect.
So which leads to my question: what's the point of these sanctions? I mean, one reason they've been suggested, as we talked about before, is that to bleed Russia of what hard currency it is earning and reduce its ability to fund the war. But as you said, the GL8B allows the energy payments to continue, and that's loads of money. It's more than Russia needs to fund the war. And we've also been saying that, you know, the amount of money is not that big, and actually this is going to affect Russia's economy in several years' time by denigrating its ability to raise money internationally as the budget shrinks, as the economy shrinks as a result of all of this. But that's also down the road. And my understanding of sanctions is that they're a diplomatic tool which you put on another country in order to persuade them to do something that you want to. However, these sanctions look designed specifically to crush and wound the Russian economy as much as possible. And actually, there's no expectation we're going to get anything out of Russia as a result of these sanctions. And our experience of Putin is if you sanction him, he just digs in. So isn't that it? Are we in an economic war?
100% we're in an economic war, and I think it's really important to have that framing. And I think it's very bad that both Europe and America hasn't done that enough, because it would be better for preparing Europeans to deal with some of the particular costs of this, and then to agree the sort of the carrots that we need alongside the sticks to make this stuff more acceptable within Europe. But 100% we're in an economic war, and I think anybody who says otherwise is quite foolish. Now, I much prefer economic war to kinetic wars, right? You know. The expression "war is politics" by other means, economic war is, war by other means, and I much prefer to be dealing with losses in dollars than I do to be dealing with losses in lives. One other point that I would say, other than that the point is really to sort of bludgeon the Russian economy, deal with the long term, is to go back. Again, one doesn't need a lot of knowledge about the background, but to go to the Sudan example, right? Sudan has had a bunch of political changes in the last few years. Bashir is out. Not saying new people are all great, but the sort of reintegration of Sudan into the international order, rules-based international order, as the Russian state likes to mock, so to speak, really came through the new government's initial negotiation with international partners, both about its private debts and its intergovernmental debts that then got put back together. So in some ways, this is also something that says, okay, when there is a new Russia, whatever that new Russia is, dealing with this will be the process that then ultimately signals the beginning of a new relationship. Again, that's 1, 5, or 10 years.
We're about to run out of time, but you mentioned several times new Russia, and I'm just trying to take on a piece at the moment to look further down the road, not just like 1, 2 years, but 5 years. And assuming that Russia gets Donbass and sits on it, and these sanctions stay in place forever, and that the Russian economy, what that will do to it, which is obviously a great deal of damage. It's also going to, significantly reduce Russia's oil and gas business until they can build new infrastructure east, which is going to take at least 5 years and cost tens of billions of dollars. But this new Russia, I mean, what do you think the long-term consequences of this are? Because the thing with an economic war is, unlike a kinetic war where, somebody loses because they're dead, the economic war, this will go on forever. Haven't we just seen a destruction of globalization? Haven't we just seen... You just
dropped out for a second there.
I'm sorry, my German internet. Take me back to Moscow where the internet works.
Well, I can't hear you for a second, but just really quickly on the consequences of the economic war for Russia. The key thing that I think will be made is that, and the point that I've been making is, the headline ruble figures and whatever don't matter anymore. The interest rates don't matter. The Russian market economy is something that I see as already dead. And in some ways, what we're seeing now is sort of a zombie-ified version of it, hopping along until the next thing comes. My real concern is that the only option for Russia and for the Putin regime is to go full autarky, full state command economy. And I'm not talking something that looks like China, where you have a communist party sitting atop a essential market economy, but essentially something that looks like more of a Stalinist era economy, or even a North Korean Juche self-reliance style, and that just looking at the kind of projects that Russia's going to need to recover from the war in the territory it's quite clearly plans to annex. Mariupol, how are they going to get the billions that would take to rebuild those steel factories, which were the economic lifeblood of them and what the locals cared about so much for so many years. How do you drive up investment in a country where the economic elites are still very much wedded to some kind of are still wedded to some kind of orthodoxy? And it's a very dark and bleak outlook for me, and I have real worries about what the Kremlin is going to have to do in the next few years to try to put an economy back together. Because just like you can't fight a war like you did in the Stalinist era, I don't think you can have the kind of 5-year plans based off labor camps that would be necessary to do those things. But I do see it headed down a very autarkic path.
Doesn't that mean that, it's all over?
I can't hear you again. Hold on.
You can't hear me again?
Yeah, now I can hear you.
Yeah?
Yep.
Sorry. Doesn't that mean it's all over? I mean, like Russia, after the fall of the Soviet Union, yeah?
Hold on. It just tells me we've lost the space on Twitter.
Well, look, can you hear me?
I can hear you. You can finish on here, sure.
All right. Well, we're just wrapping up. I mean, doesn't this mean that we had the Soviet Union collapsed, and then we had this brief decade in the noughties where Russia flourished and became a normal country, and now it's all gone to shit. And going forward, we've gone back to Cold War, an Iron Curtain of sorts. Now it's a sort of economic one, and that Russia's doomed because of a lack of technology more than anything else to stagnate and just fall behind the rest of the world until there's some sort of revolution.
I mean, I don't want to say that I agree with that, because obviously I care a lot about Russia and I have a lot of Russian friends and I want good things for Russia, and regardless of my disagreements or distaste for their current political leadership. But short answer is yes. As long as this government remains in power, and again, that's part of the Western strategy, is that we're not going to have any other. There's not going to be any other option for Russia and Russians, and of course, it's not credit market access that in itself offers that, right? In the late 19th century, as Russia was ending serfdom and the like, they had good credit market access from Germany and then from France, and that money didn't go to develop people. But the larger sanctions regime is really that way. And one example that I want to I hope there's some kind of work with all these chip and technology sanctions, right? If one was in the business of exporting high-end medical equipment right now, it'd be very difficult to export high-end medical equipment to Russia. The real concern I have there is how this is going to play out, for humanitarian impacts around the world. And again, going back to just make the point again, the economic war impact, I see someone's put in a comment here, it's going to have tons of impacts around the world. Fertilizer, grain, the Russians have now tied that grain blockade on Ukraine to these sanctions environment. And I think unless we start discussing it that way, and then our governments effectively say we need to be on a wartime footing. Now, I do think the Kremlin's invasion of Ukraine is so egregious and such a violation of international norms that we should be preparing and saying we're in an economic war, but failure to do so makes it a lot harder you can't win a war you don't know you're fighting. Yeah.
No, I mean, harrowing. I was talking to Chris Rule just before this all started, and he said that was it. We in the West are going to change mentality if we're going to cope with a showdown with Russia and put ourselves into a wartime mentality in order to cope with it, because it's going to come with costs. Look, on that somber note, Max, I'd like to say thank you very much for joining us. That was fascinating. Great day. And for all of those out there who are listening on Zoom, Twitter, YouTube, thanks very much for joining. We'll do another one of these soon. I think we'll need to do a food one fairly soon. If you're interested in following this story in more detail, then I point you to IntelliNews.com/welcome, where you can find both a copy of this via our BNE YouTube channel. The link is there. And we've, of course, reporting on this every day. If you want to follow the best of our stories, we do an email digest called Editor's Picks, which is free. And that carries the best stories from the last 24 hours. Of course, it's very heavily Ukraine focused at the moment. And finally, if you're in the game or you want to get into the nuts and bolts of the stuff that me and Max were talking about on bonds and payments and what have you, then please take a trial to our premium service, BNE Pro. And you can have a look at that, where we have hundreds of stories every day from across the region. So once again, thanks for joining. Pleasure. Hope to see you next time.